Okay, so the fund flow that you see here, right? You can see the blue color is the institutional fund. So we are more interested in the blue color line and then the red color line. So for the blue color line, right, you can see that for the entire of the COVID period, right, from early this year until sometimes in October, right, we are in the negative zone. You can see right here. But from October onwards, we see that the institutional fund flow have rise above zero, going to plus 500 lah. Whereas the retail fund flow is dipping downward. So we are like switching of the position lah. Like the red and blue lines are now inverted. So for the latest fund flow data, right, it is not actually for this week, it is for the previous week, mainly because SGX released the data 1 week later. So we will be getting the Singapore fund flow for this week tomorrow. So they released the data on Monday, and you will see that I will upload this every Monday lah, the updated version lah, every Monday. So when we see the data for the fund flow coming Monday, right? I will expect to see a very sharp increase in institutional fund flow, mainly because, as you all know, this week we have a huge bullish run on the STI itself. All the counters are start to run up lah. So because of that, right, I will expect this trend to continue for the next 1 month or 2 months, and we will be seeing a very very bullish run on the Singapore index lah. So you can see here on the right chart, right? This is the cumulative fund flow. So what you can see is that the institutional have been going down since around February, 3rd of February earlier this year, but right now we are dipping up. And for the past few weeks, we have been stagnant a bit, but I think this is more like resting period. Then it will continue to climb back up, while the retail are going to start to come down, and we will see a swap in position where retail will go into the negative mode, while the institutional will start to climb back into the positive mode. So we are looking very, very good for the early part of 2020 going into Chinese New Year lah. So whatever you do, right, do not short. And this is how you make use of the fund flow chart. And together with the scanner, right, we will be able to see a lot of very, very good trend, very good data that you can make use to sort of position your trade, as in position yourself to be either greedy or rather to held back your trade for a while. So this kind of thing, right, is something that you need to put in your effort and try to think for yourself rather than waiting to be given instruction and information and waiting to be spoon fed like in a way. Because Patreon itself is meant as a platform for me to give you data, give you counters, give you a guideline on where to put your entry and stop loss. But ultimately, you will benefit a lot more if you put in the effort yourself to learn to make use of these data by yourself. So mainly most of my trainee who come for my course, right, they are very considered independent now already, and I can tell you that most of them perform much better in terms of their trades compared to me, because they are taking up all the trades by themselves, whereas I am still mainly occupied by my full-time job, making enough content for Patreon, and even teaching the course itself lah. So you can get very far ahead by doing things yourself rather than waiting for me to tell you what to do. Okay, so now we have this fund flow data, right? This is very very important. So let's go and take a look at how the Singapore index looks like for the past week. So you can see that we have a very bullish movement in the past 2 days, and actually the past 3 days. And I have been mentioning since this whole period, right? We are actually on a break. The market is resting. It is not like it's going to go back down. Rather, it is sort of taking a break. It is letting all the retailer to sell, while the smart money take a rest. And when it is quite clear that retailer have sort of exited lah, because I mean, as retail, right, you catch this trend a bit, you'll be very happy already ma. wow, like so much profit already, our TP ready, and smart money tend to wait for retailer to TP finish while they stay sideline. And once they feel that retailer have taken profit finish, right, they will start to push up again. So this will become apparent when Monday the smart money the data comes out lah. And another thing is that if you notice the scanner was posted on, if I'm not wrong, Thursday. So when I post the test scanner on Thursday, right, you'll notice that I put like a breaking tag because something happened in the scanner that don't usually happen. And if you see this, right, it is a very, very clear sign that market is going to be bullish. So what happened on Thursday scanner that does not usually happen? That is all the SDI constituent counters are showing up on the Thursday scanner around this point here. So even on the Friday scanner, the same counters are showing up. So what you will see is you will see all the DBS is there, UOB is there, OCBC is there, Singtel is there, Semcor Industry is there, Jardine is there, and I think even at the bottom, you have Venture is there, Comfort Delgro is there. So all these counters, right, they don't usually show up on my scanner if you notice. And once you see the whole bunch of them shows up, it is a very, very clear sign that market is good to go. Market is going to rally up. And another thing you have to take note is also that I think this information is sometimes not displayed. But of course, even if it's displayed, right? Those who are subscribed to $10 and $20, they probably disregard this information also. But because you guys are on the $40 tiers, right? I will sort of reveal this particular information to you, which is the number of matches. So on today, right? This scanner is for today, which you see it was posted not long ago, earlier in the day only. So there are actually 39 matches on Singapore scanner itself. And most of the time, you do not see 39 matches on Singapore scanner. Most likely you'll get 10, 12. Those are considered a lot already. Sometimes you get like 5, 6. But today, and probably on Thursday, we have a very high number of matches. So what does this high number of matches tells you is that a lot of counters are going up, a lot of counters are positive, and not only a lot of counters are positive, majority of the counters are Singapore index constituent, the big cap, the big company, not the small penny here and there, but rather the big company. So this is a sign that you can afford to be greedy. And when I say you can afford to be greedy, right, I don't mean that you go all the way YOLO, like throw your stop loss out, like just put all your money in, go CFD to the maximum, not like that. But rather, you can afford to chase certain counter. You can afford to take a little bit more risk. So if you are taking 2% risk per position, now you can at least go for 3%, 4% risk. So that is what I mean by you can afford to risk more. You can afford to be more greedy. I don't mean in a way that you usually take 3% risk, but right now you go and take like 30% risk like that because everything going up. Along the way, right? Because as I said, this trend will continue about maybe 2-3 months, probably into Chinese New Year. So along the way, right, there's definitely going to be retrace. Definitely going to be resting period. So when these periods happen, you do not want to be cut off. You do not want to be cut off by the market, and then you get stop out, and then the price continue to run without you. You do not want to be in that position, which is why you should always follow the stop loss. As long as the stop loss is not hit, you do not cut. And this week is a very, very good example because all the counters that were picked up quite a while back, such as Food Empire. Food Empire was extremely long time ago. And we also have Big Plus, Aspen, Avagra all start to moving up already. And also Innotech has also moved up. So all these counters, they are start to move up already. And if you notice, right, none of those counter hit my stop loss. So if you exit those counter and chase another counter, right? How often that the new counter that you chase, it move up immediately also. So most of the time you are going to be stuck in the new counter because there's no way for you to predict the future. You don't know whether if I cut this and chase the other counter is going to go up. So more often than not, you are cutting one to chase another, then the another one is also stuck. What you are essentially doing is just giving your brokerage a lot of business lah. So rather than chasing here and there, just stick to that counter, wait it out. Most likely it's going to go up, and there will be times where you get cut off, but those times are very, very rare. And it is good to wait it out for it's good to wait it out because eventually you are going to profit a lot. And if you do this over the course of 1 year, right, you are definitely going to get more than 30% return on your trading portfolio. And you get this return simply by doing nothing. Just buy and sit there, and you can go and do whatever you want. So that's the best trading situation that you can actually get to make money by doing nothing. It reduce all the time that you need, because no matter because most people want to take up trading because they want to pursue their passion lah, what's not lah. So these are the opportunity that you can you use to make use of the time lah. So with that said, right, do not short. Whatever you do not short at right now. Everything is going quite bullish. And there's another thing that I want to share also, and this is not out in the public yet. My main intention is to share it during March. If you all see my Patreon overhaul post, it is currently pinned up in the Telegram channel. You can go and take a look. So that is trade for 2021. So what I'm going to do is I'm going to document all the trade that I have recommended for 2021, and I'm going to put a column here that say how many days does the trade takes to either profit or to get a loss. And then I'm going to put out a chart that shows how many of the trades have profited, how many of the trades have lost, and how many of the trades are still open. And towards the so as we pass this year, right, this chart will get updated more and more, and you will see much more counters coming up lah. So you can, so at the end of the year you'll be able to see the average number of days that the trade takes, and how many losses, how many profit. Loss mean the trade hit the stop loss that I recommended in my post. And if it profits, it means that you are going to get TP1, just TP1, not TP2, because my trades are set up in a way where if you hit if all your hit trade hit TP1, right, you are definitely going to be profitable, and you will be profitable quite substantially without the need to hit TP2. TP2 is like a bonus. So if you hit TP1, right, whatever you want to do beyond that is really your own choice really. I am in no way going to support beyond that. And in fact, Patreon is meant out as a self-service lah. It's just meant out to put up there so that you guys can take the information and do whatever you want with it, rather than me giving a lot of guidance along the way. Because if you want guidance, then that's what the course is for lah. But of course, for the highest tier, we have things like webinars. So you will still get this interaction with me, and I can clarify some of the questions that you guys will have. So currently I'm not going to show this public because order, right? Order, you don't have to worry about the name. But what this means is, if there's a tick, it means that I personally take the trade. I am in the trade. If there's no take, it means that I doesn't take the trade. So you don't need you don't need to worry about which trade that I take, which trade that I don't trade, because eventually I'm going to have a statistic of all the trade that has been shared. Regardless I take or not, you will see what is the winning ratio like, and you can compare to all the trades that I personally take, and you can also compare the winning ratio. So more often than not, right, you will see that this column here, it will turns out to be much better than my own column, because I'm a very busy person. I have most of my time are taken up, and I don't really have the time to go and look at every single trade and take every trade that I can get lah. Because sometimes certain day I'm busy, I don't look at the market, I just let it be, and then the next day I realize that, hey, how come so many things running up when I could have taken all those trades. So this is just for information purpose. It's not for you to follow like, oh, Zor take this trade, so I'm also going to take the trade. If you do that, right, you are going to perform way better than your highest potential that you could have performed lah. And secondly, right, and okay, all these questions coming out, right, please wait, is I have mentioned that it's part of, it will be part of the discussion, so relax. And shoot, what did I want to say? And okay, also some of the trade that I take, right, you will also notice that I took the DBS trade, but I did not take the STI ETF trade. Why? Because DBS is part of STI. If one is going up, the other one is going to be heading up also. So you just have to pick one. It doesn't really matter which one you pick because both of them are the same thing. And another thing is between US Steel and Sunrun. I took Sunrun instead of US Steel, mainly because I simply do not want to go into two US counter on the same day. So rather I just pick one of them because both of them are given put up on the same day itself. So there will be certain small decision that cause me to enter one trade but doesn't enter the other. But these are very minor decision. You don't need to think like I have some deep dark secret that I'm not sort of sharing, but most of the time is minor things that you all don't have to worry about. Sometimes it can be also that, okay, perhaps on this day, right, I only have this much available capital, and it is just so that this counter is too expensive for me to play, so I'm going to play the cheaper one instead. So that can be some of the situation also lah. Okay, so hopefully in after January we have much more data and it will be released released publicly lah. So once again, this data will be released every Saturday. It is not meant as a live trading tool, so it is not meant to be like you see what I post and you go and enter, which is why I have purposely excluded the entry price, because a lot of you are too focused on the entry price, which is in my trading system is the least important. I don't care where I enter, but if you notice how I enter, I'll always enter when the market open. I put my order and then I just go and do whatever I do. So you can realize DBS, I actually chase the price. I chase the price and then I enter, then I just let it be. And while most of you are trying so hard to get that entry, to get the correct entry, right, you miss out the entire trade itself, because there is a very easy way to determine should you chase or not, whether is it worth chasing or not. So let's go look at some of these counter, and of course the most common one is DBS. So in my trading view, I organize it very nicely. You can see I have my trade in 2021, my trade in 2020 that I'm still holding, haven't closed out yet. I have Patreon trade set up. So these are all the trade setup that I've been posted on Patreon. So please try to organize yourself. Don't everything YOLO very last minute. Always organize. If you organize, right, things will go a lot better without you even realizing it, just by being organized. So let's look at DBS as an example. So these are all the trade level. This is the stop loss. Okay. So DBS show up on scanner on Thursday. So I post the trade after market close on Thursday. So it is quite fair enough that you are not going to get that Thursday candle. But Friday, price open gap up. So when price open gap up, a lot of you all panic, don't know what to do. And how much is that gap up? It's only 2%. So if you are afraid of that 2% gap up, so meaning, let's say if price did not gap up, price just open at 26 like that, instead of opening up at 26.4 or 26.5, will you have taken the trade? If you say you will take the trade, then why is this little gap so much of a factor to you on whether you should take the trade or not? So this gap is, to me, is considered is considered a small gap. It's not something that should deter you from taking a trade. What kind of gap that is much more that should prevent you from taking a trade is this kind of gap. This kind of gap is, if you look at it, it's a 7% gap. So if a counter jumps straight up 7%, right, I might forgo it altogether. So then you will be asking, so what is the number that I should follow? And I always tell you guys that don't be that person who always looking for a magic number. There is no magic number that will work for every single situation. You have to assess each single situation on its own merit. You cannot come up with a magic number like, oh, if it gap up by more than 5%, I'm not going to chase. And then there will be some trade that gap up 5%, but it's actually worth chasing. So what is the second criteria? The second criteria is you look at where the stop loss is. The stop loss is at 23.41. So if let's say price open at 26 and the stop loss is at 23.41, you look at this much. So if let's say price come back down, right, you are going to get hit with this amount of loss. So if price gap up by a bit, around 26.5, you are going to hit with this amount of loss that is a little bit more tiny. So the question to ask is, can you accept that loss? So most of you trade with the thinking of how much can I profit when I enter the trade? But the better way to enter a trade is ask yourself, how much am I willing to lose? If you enter a trade on that mindset, right, entry no longer matters to you. Entry is the least important thing. And that is how I train my trainee to think. Whenever you enter a trade, ask yourself, how much am I willing to lose? If you are okay with that amount, go and chase. Feel free to chase. Because that stop loss there, right, it is set in a very specific manner that if price retrace, should price retrace, you are never going to hit this stop loss unless it is a legit downtrend. Then you will be hit. Then of course you should be out. But if it hit, you have already tell yourself that you are comfortable taking that risk already. So there should not be any question on whether I should not have chased that wala, because even before you chase, you have told yourself that I can take this risk. So suppose price gap up so much, right? Price have gap up so much. And if you consider that this is a lot, you cannot handle it, but you also want to chase, and the stop loss is here, there's another thing you can do. You can reduce your lot sizing. So if let's say you have planned out your risk in a way where you enter 26, price come down, you are willing to lose $600, and then you go and calculate your lot sizing, and you learn that you can go for 1,500 shares. But because now price have gap up, right? If you still go for 1,500 shares and price hit your stop loss, you're probably going to lose like maybe $900. But in order to maintain your risk at 600, instead of going 1,500, you can actually go 1,200 shares to make up for that little jump. So that's normally what I do, because I will plan my trade at the closing price. I will plan my trade at the previous day closing price. So if price gap up too much, right, then I will lower my lot size by a bit so that if it hit my stop loss, right, I will still lose the same amount of money as if I have entered at a lower price itself. So if you think of it that way, right, then your entry no longer matter, because no matter what, you are always losing the same amount. You just lower your lot size a bit. So the only reason why you were scared to enter when price go up is you are thinking in the greedy, the profit oriented mindset where how much can I lose? So if you switch your mindset, right, you will realize that entry is not really important. It's not really the most important thing. And of course, there are also other criteria. Because all these blue chip counter are showing up in my scanner, and it has also broken out of the resistance. I am quite confident that we are having bullish days coming ahead. So I also sort of make the decision to chase. But of course, this decision is a very minor uh role that it plays a very minor role in making me want to chase. But rather the big criteria is because is I can handle this additional risk that I am taking, this little gap up. I am okay with taking. So another question is, let's say gap up, right? You scared what if it retrace down? If it retrace down, then the thing is let it retrace, because If it's just a short retrace before another rally, right, then you are not going to hit your stop loss. So, and in order to take advantage of that retrace, you can have multiple entry, which is why you will see that my trades all have multiple entry in case price retrace down. And all these multiple entries, right, you are supposed to work out the lot sizing yourself so that if all your entries hit the stop loss, right, you will still be sort of within your risk limit, be it 1% risk, 2% risk, whatever you need to sell. So this is a very simple mathematical calculation that you can do it yourself. And I don't think it requires any action on my part to teach you how to do this calculation, because it is quite a simple thing to be done. So that is basically how I decide something is worth chasing. So that's everything to it. There's no secret technique, secret trick, or secret information I'm not sharing. That's basically it, and that's basically what I share with my course trainee. So whether or not you should chase or what, it really comes down to your own comfort level. You have to put you because you and me have different risk appetite. We have different account. We have different capital. So something that is worth chasing to me is might not be worth chasing to you. So you really have to look into your own risk appetite and your capital to decide it is worth chasing or not. But always based on decision on how much am I willing to lose. So that's how you decide lah. And of course there will be some other counters that I don't I will definitely not chase, but currently I can't think of any counter at the moment. So when I do see such counter, right, I will always share it in the future webinar. Okay, nextly, um will the entry date based on a possible entry price indicator, or there are two possible which, and uh when there are two possible entry, which entry price? So okay, so once again you are thinking to choose, or so the reason you need to first understand is the reason for why are there multiple entries. So first resources is a very good example. If there are two entries here, right, the second entry is there in case price retrace. If price retrace, you can at least catch this entry so that you are not stuck at the top. So at least when you get this entry, right, your average price sort of lower down by a bit. So whether or not you want to split your entry to 50, 50, 70, 30, 0, 100, 100, 0, that one is up to you. So you really need to once again decide for yourself. There is no magic number that I can give you. So if you are the kind that you are very conservative, you want to wait for price to come back down, then you can definitely don't enter here. You can enter here. But if you enter here and don't enter here, what if price shoot up straight? Then you are going to miss your entry. So if you decide to be that conservative, right, then you definitely have the risk of missing the trade when it go up. So you cannot have a win-win position. There's you cannot want everything. You cannot have your trade to like want everything like that. It's like or you want to be conservative, or you also want to chase. So it's like you are asking too much really lah. And at some point you need to make a decision on what kind of trade you want to take. So if you are the type that you want, okay, let's say if price go up, I also want a bit, then you enter 50%. And price come back down here, you enter another 50% more. Then your average price is like much lower than, let's say, you have entered 100% on the top there. But if let's say you enter 50% of your plan lot size here, and then price go back up, and then you think to yourself, alamak, I should enter 100% instead. Now I only enter 50. Now I don't get that much profit. So that's the risk that you take by going the half route. So every decision you make, right, there is a consequences, and you need to be able to understand those consequences and make the decision. There is there's no action that you can take where you come out 100% winning in the end. There is always something you must give up if you decide to be greedy, or if you decide to be conservative. So um one advice that I can give, if you feel that the stop loss is the given stop loss that I shown on my trade setup is too far from the entry that you are taking, right? You can go for multiple entry, split it into multiple entry. if you feel that the stop loss is not too far, is quite okay, is nice for you, then you simply put all your 100% of your position there. So that's one advice I can give you lah. So the next one, the last issue with TP1 and TP2. Okay, so this is UMS. So you have TP1 here, then you have TP2 here. So let's say you hit TP1 and then you TP everything, price go back, price continue to go up, and you say, hey, price go up already, then I TP everything here. So what should I do? So once again, right, it is the same as the entry issue here. If you have two entry issue, then that same logic apply. What do you want? Do you want all the money in all the profit in your pocket? Do you want it right now? If you want, you TP everything. But if let's say you don't want so much, you want to TP everything, yeah, you want to like hold on a bit in case price go up further, right? Then you maybe TP 50%, then the other 50% you TP here. So if you feel that, oh, you TP 50%, then what if price come back down? Then if that's the case, right? That's the risk that you take for I would say being greedy in order to want that TP2 lah. So the TP is there as a rough guideline on where you can take the profit. It is not there as a prediction to say that price will confirm go there. It's not meant for that purpose. The TP level there are for you to have a rough guideline on when to put money in your pocket. So if you are the kind that want money in the pocket straight, right, definitely take profit everything at level 1. But if you feel that, okay, I don't really want all the money yet, maybe I can keep some more. So you can go for maybe 50% here, keep the 50% for the TP2. So if you, so whether or not you want to once again go 50, 50, 60, 40, 70, 30, once again, it's really up to you on whether which one you value more. But as I said earlier, even if you take all the trade at TP1 and take TP everything at TP1, right? Eventually, you are still going to come out very, very profitable. So the reason why you are sort of being FOMO or what is that you see after your TP price go even further. So if that's the case, right, what I can suggest is you TP 90% and then just keep the 10% there. So at least it sort of cure your FOMO mentality. Like at least you will think to yourself, oh, at least I still have 10% there. And the next question will be that if I do that, then my commission is going to be very high. So once again, you cannot have everything, all the nice thing in the world. You need to start making decision ready. So if you are on brokerage such as CMC or local brokerages, right, you are going to have $10 brokerage fee, or worse, $25 brokerage, the minimum brokerage fee. So definitely taking multiple entries and taking multiple TP might not be good for you. So in that case, right, you either have a very, very big account, like 200K account, where that amount of $25 is almost not existent to you, or you go and find a brokerage with very, very low brokerage fee, like Tiger Broker, which I am recommending quite a lot recently lah, due to the outrageously low brokerage fee. So if you go for Tiger, right, even with a small account, you can afford to take multiple entry and multiple TP level. Pertaining to the retrace can add more to average down the price, but how if counter not listed in the new scanner list already, assuming price reveal? Can you simplify your question a bit? Your retrace is, what kind of retrace are you talking about? Are you talking about retrace from the entry or retrace from the TP? If you are talking about retrace on the entry, right, I've already mentioned that there are multiple entry. So you make use of the multiple entries that I have given in my counter. So you can see if this one retrace. So currently right now I have position on this counter. I entered here. If it retrace until here, right, I'm gonna average down and add until there. So if let's say you only see this counter now, you did not see it at the day where the scanner come up, right? Then once again, you have to make the decision. Do you want to chase? Do you want to go into a trade that is retracing, or do you want a new trade where there's, because every day there will be something that is running. Every 2 days I will be posting a scanner. So you need to decide for yourself. Do you want this counter where price is retracing, or do you want a new counter where things are going up? So that's ultimately up to you also. So there's nothing wrong with entering this one here. But would you rather, since you already miss it at the initial day where the scanner shows out, right? You miss it, but price retrace. So will you enter at this retrace, or will you want to go and look for another counter with a much better trade setup that you see? So that is something that you have to decide for yourself. Also, it's not like very clear cut. I can give you one formula. I can give you one magic number like that. So every day there will be something running. Every 2 days there will be a lot of stuff coming up in the scanner. So you have to make that decision. Okay, so I think this session it have become a ask me anything question where a lot of questions are I did not intend my webinar to be this kind of uh answering question things. Like it's more for me to share what are the counters that you can play next week. So I do hope that while on a $40 webinar you do have the chance to ask question and sort of interact. Ultimately, as a whole, Patreon is not meant as a replacement to my course lah. So a lot of things that I told you, right, is actually taught very in detail in my course. And also, to be fair to those who pay and come for my course, right, I also do not wish to reveal so much, do not wish to share so much that it is not fair for them. So in the future, right, the Patreon, it is more of a self-service. You take the information, you do whatever you want with it, and I am sort of not involved in it lah. But of course I do want to guide a bit along here and there. But I do apologize in the future, right? You text me and ask me a very long question, right? I might not respond. It is mainly because number one, it diminishes the value of my course, and number two, because currently I have quite a lot of subscription on my Patreon, right? I simply cannot answer everyone's question lah. So that and also because I'm getting busier and busier, right? I will be responding much lesser and lesser, especially to information that has already been shared, or information that are already in the introductory video, or any things that have to do with trade request post. Trade request post mean things like, hey Zor, can you look at this counter and tell me what you think? All these are not part of the Patreon service. So all those will not be shared, but rather what I want you all. So this session is for me to share new things, new counters, perhaps some insight that I have, which might be more of value to you rather than answering most of your questions lah, which I feel that um they can be found in most of the YouTube video that I have already put up. So let's come to the last portion. Is how two of my trainees, right? They managed to catch two very good counters. One was last year, Fuelcell. Is actually that counter was posted on Patreon also. I'm not sure if any one of you caught it, or if any one of you sort of remembered it. Fuelcell went up about 100%. And very recently, I have another trainee who managed to catch 3D, which also went up 100% like 2 days ago. So how did they manage to catch all these kind of counter and stay in the trade, right? It is mainly because of the principle that I drill my trainee to follow, and these are the same principle that you can find in your introductory video lah. And it is also the same thing that I shared in Facebook, which is never ever exit the counter unless it hit your stop loss. So let me do a quick sharing and how you can apply this sort of to your trades lah. And you can also see how this not exiting before it hit your stop loss sort of plays into the whole strategy itself. So Fuelcell. Fuelcell, if you see this chart, you can see that it went up from here somewhere until here. Let's say here lah, because my trainee TP around somewhere here. So let's not even talk about all these. I give chance from here to here. So you can see that from here to there, right? It's already 87%, going into 90% already. Okay. So how did she manage to catch this trade? So Fuelcell actually came out on my scanner at here, at this candle. It came out on the scanner. So what she did was she entered the next day here, and the stop loss was like somewhere around here, I think. If I'm not wrong, when she entered here, the stop loss was like somewhere here. So for this case, right, it was actually quite clear cut because after she entered, right, price immediately shoot all the way up. Price immediately shoot all the way up, and she managed to catch this portion here. And when she catch this portion here, she didn't TP everything. She left a bit there, and there's a bit of retrace. But because it did not hit any of the stop loss or it did not break even, right, she managed to hold on to the trade, and then she catch this bit here also. So from here to here, we have close to about 100% gain there. 100% gain of whatever you enter. So if you are those kind where you enter here, then you see that next day never go up, next day never go up, and then you get impatient and you go and exit the trade, right? You are going to miss this whole stretch already. So Fuelcell is actually quite straightforward, but let's look at DDD. So DDD, right? My trainee actually caught this here. My trainee actually catch this counter here on the 23rd. So what you will notice is that on the 23rd, right, there is no scanner post. The scanner post came out on 24th. So most of you will not have CDDD in your scanner because 23rd was actually a Wednesday, December. So it came out on 24th, which is on a Thursday. So for those who come for my course, right, they have access to the scanner software itself, not just the screenshot. They have access to the scanner. They are taught how to use the scanner. They are taught how to read the scanner and how to choose the counter based on the scanner lah. So my trainee actually caught this on the scanner by himself. He caught it independently. He didn't come to me like, hey, can trade this or not, can trade that or not. No, he managed to catch this independently. And I think his stop loss, sorry, after he entered, his stop loss was here. His stop loss was here. So the core strategy of my course is I also teach them how to place a stop loss properly, so that whenever there's a retrace, right, you do not get hit out. You do not get get cut off, which is why we managed to get trades like Raffles Medical. We managed to get trades like Franken. We managed to get trades like GKE, whereas most of the retailer are running for exit when the price retraces a bit. So for this, right, he placed his stop loss there. And when price retrace all the way this three candle, right, because the stop loss is not hit, he held on to the position. And you need to ask yourself, if you are in this position, right, you enter here and price actually drop like this, right, how many of you will panic and run? I believe that most of you will panic and run, and it's like about 7-8 days. So whenever a trade gets stuck for 7-8 days, right, there's a lot of folks that start to get impatient already. But because he held on to the trade, right, he held on to the principle, the core principle that I taught them, right, he managed to eventually get that stretch there. So the key thing is that there's no way to predict where this kind of thing will come, where this kind of movement will come. There's no way to predict this. When he entered here, right, he didn't know this is coming. But because he followed all the core principle where setting your stop loss properly, not exiting when your stop loss is not hit, right, he managed to catch this trade. So in 1 year, right, if you enter like 100 trades, right, within that 100 trades, as long as you follow this principle, you will catch at least one or two of this kind of big trade. And you only need to catch this kind of trade once or twice in order to push your account by like 20-30% within just one trade. So that is important because most of you, when you trade, right, you are trying to predict, what should I look out for so that this will happen. So a lot of you want to enter like here, then next day you want like that, and you are trying to look for signal, or you are trying to look for things that will tell you when the next day the stock will go up like 100%. And ugly truth is that there's no way in the world you can predict that, but rather you need to just enter and just follow your strategy, and when it comes right, make sure that you are in the trade. So that's the important thing. You have to make sure that you are in the trade when the rally happens, and you cannot predict when the rally is going to happen, but you can ensure that you are in the trade when it does happen. That's how people get cut off on super rally counter like Tesla, because they do not they do not place their stop loss properly. Let me just show Tesla counter. Tesla is a extremely bullish counter, but how many manage to catch this whole thing? Uh, the answer is not many, because if you enter here and your stop loss is like somewhere here and here, and you cannot hold this stretch, right, you are going to be out of the trade when this happen. And you can see that it is from September to November, about 2 months. And you can see most of my trades also, they last, the longest last for about 3-4 months. And I have people who actually held on to the entire 3-4 months, like Food Empire. If you look at Food Empire, let me show you Food Empire. Let's just sidetrack a bit. Let me show you Food Empire. So for those of you who have been on my channel for a long time, right? You will notice that Food Empire, actually I posted it on Facebook. It was not even in Patreon, because Patreon wasn't set up back then yet. So Food Empire was actually somewhere around here. I make the buy call here, and then the stop loss was like somewhere here. So I actually have people that held on to this entire stretch, and they are sort of able to catch this whole trend. So if you look at the entry to the current price now, right, it's about 15%, not as much as Tesla, but at least they are in the trade. So in trading, right, there will be a lot of situation like this, or even here, if you chase here and then your stop loss is not set properly and you cannot handle this little portion, right, you are going to miss this whole stretch. You are going to miss this whole stretch, which is about 50% gain already. And once again, it happens somewhere here, and also it happens somewhere like here. If you chase here and then you get impatient within the next 4 days, right, because Tesla going up, but the moment you enter it went sideways, right, you get impatient, right, you are going to miss this whole stretch. So you need to train yourself in not predicting the future, but rather stay in the trade when the trend is happening. And because of my scanner, right, you don't even need to predict which counter are going to run out. You just look at the scanner, see which are the trade that you can take, and simply or you just wait for my trade setup and simply just follow the plan there, and things will eventually run out. You also have counters like Vic Plus running up quite a lot recently lah. So always trade from that angle lah. So you do need to change your mindset to sort of to take your trade properly, and this changing mindset thing is, if you look at my course website, right, it is the main one of the main core teaching tool for my course also lah. Okay, so that's enough sharing for today on all this stuff, right? Let's quickly go through some of the stocks coming in next week. So I'll be very fast in this. Number one, Hong Leong Asia, I think I mentioned in last week webinar also. I'm not sure if any of you catch it. But I think it was like somewhere here or here. I forgot already, but it did manage to run out. So now currently it's like retracing a bit. So if it retrace to about 0.73, right, you can actually enter and place your stop loss around like 6 like that, for 73 to 6 like that. Okay. Then if you want to place another entry, up to you. If it retrace, you can catch, but you can catch this. So the reason why you don't want to enter here and put your stop loss at 6 is, I believe that this is slightly too much lah. But if it is like somewhere around here, then this amount of risk is okay. So that's how I decide whether I should wait for retrace or I should just chung. Is based on my stop loss. Is it too far from my stop loss? Next one, Franken. So once again, Franken is a very good example of people exiting too early and then miss the whole rally. So I recommended here. A lot of people could not could not wait for this little retrace. I recommended somewhere here, they couldn't wait for this retrace. So right now we are coming back down again. So since price is retracing, right, a good stop loss area will be 1.1. So now you need to ask, so your question will be, where should I enter? So don't focus on the entry price, focus on how much you are willing to risk, and based on that amount that you are willing to risk, right, you work out where your entry is. So you work backwards, and once you work out the entry, right, you will be able to stay in the trade because your stop loss is fixed. You are not compromising your stop loss to get the entry, but rather you are moving your entry, you are moving your lot sizing, and you are putting your stop loss as a fixed point. Next one, Credit Bureau Asia hit the stop loss ready. Hit the TP ready, but now coming back a bit down. So when it hits somewhere around like 1.3, right, actually you can enter and your stop loss can be around 1.15. So from here to here is a bit too much, but from here to here is, I would say, acceptable. So can wait for it. If you miss the TP here, then so let's say you enter but you miss the TP there. What I can tell you is that you stick to the original stop loss that I have provider for you lah. I think this trend is still a good trend to go. So just stick to the stop loss. I think you'll be fine. Next one, Singapore Medical. Singapore Medical show up. I recommend this somewhere here also. So same thing is going sideways a bit. So the stop loss is like somewhere. I forgot where already. I think you can refer back to the post lah, but just stick to the stop loss. It will most likely go sideways. Sorry, it will most likely go sideways before it start to shoot back up lah. And UMS, okay, UMS also same thing. Is coming back down a bit, and once again, just stick to the stop loss, right? You will be fine. Yeah. So Anhui Expressway, same thing. Stick to the stop loss. Next one, Geely Auto. So Geely Auto, there was an entry very long time, donkey years ago. So I think somewhere around here, the entry was here, and we managed to TP here. Then it retraced a bit. So there haven't been any entry since. I have not posted any entry since then lah, because after TP ready. But today it shows up on the scanner, and I think this is a very strong trend that is coming. So once again, is this good to chase? You have to ask yourself, do you want to chase this? So if you want to chase this, where is the best place to put your stop loss? But of course, I have not share with you guys how to play your stop loss. It is really for the course ready, so that one is exclusively for course, so I cannot reveal that to you. But if you want to figure it out yourself, right, you can start to sort of ask yourself, when does this trend become invalid? At which point does this uptrend no longer uptrend? Then you place your stop loss like somewhere around there. uh Ang Steel. So Ang Steel, the very first entry that I posted, it was in Patreon quite some time back lah, and it was like somewhere around, I forgot already. I think it should be this one, and we managed to get a very nice rally, and now it is coming back up again. So for this, right, the stop loss level is very easy to guess, unlike Geely Auto. So stop loss is around here, $3. You go and enter $3. If it come back down, you can take your second entry here. I think it will be a good trend to go up. Next one, Dongfang Electric. So Dongfang Electric also quite easy to guess your stop loss. It should be around 503. So from 6 to 503, right? Is it too far? If it's too far for you, wait for retrace. If you don't want to, if you scared it rally and doesn't retrace, right, then you enter a bit here. If you retrace, you enter a bit more. So if you want to really chung everything, then you enter everything there. So please make those decisions yourself. Next one, Xingyi Energy. So Xingyi Energy, I posted it on Patreon also, together with Xingyi HK. So those are the two. Was it Xingyi HK? Yeah, I mean, I think either one of them. But I think Xingyi Energy, even though it wasn't on Patreon, right? It was on previous week webinar. It was here, or oh no, sorry, it was somewhere around here like that. And if you manage to catch it, right, it is going quite well lah. Of course, the other one is, of course, the star, the Xingyi HK. This one is definitely on Patreon because I set all these level, right? So you will definitely catch this lah, from and the entry was somewhere here. So this one is going up already. So if you want to chase, definitely can chase. Your stop loss should be around 3.0. So once again, ask yourself, is this risk worth it? Are you comfortable? If you're not comfortable, wait for retrace. Maybe retrace towards like somewhere here like that. CICC. So CICC, the entry was here. Currently stuck sideways. This one is sideways, so nothing to be worried about. Don't panic. Don't prematurely exit. Eventually, once the sideways finish, when you shoot up, right, you want to be in the trade. So don't prematurely exit. Next one, Sing Sing Mining. So Sing Sing Mining, I think very long time ago, I I posted this also as one of the on Patreon. I forgot where already, but right now we are going up even further. So the stop loss should be somewhere around zero point 0.5 like that, around 0.5. So once again, the same thing. You just ask yourself whether is this worth it, you want the retrace or what. Next one, Vic Plus. Okay, Vic Plus. I think the first entry was somewhere here. My first recommendation. So if you enter there, right, you are still in the red, but stop loss is somewhere around here. So stick to your stop loss. Eventually, I think it will start to go up. So DDD not going to mention already. Fuelcell also not going to mention. So FSM, I think FSM was asked by the one of one of you folks. I saw I saw it in my message. So when it's coming down right now, right, it's kind of like retracing. I'm not sure where your stop loss is, but depending on where your entry, right, because this is already broke through the all-time high here, right? It is quite hard for me to tell you where your TP should be, mainly because all-time high, there's no TP level that I can give you. But I tend to go for a very good number. For example, now it's like 9.6, right? I like to go for 10.5. I like to go for 11.5. Profit taking strategy is very, very tricky because you are trying to predict the future where the top is, and there's no way for you to predict that. So what you need to learn to do is try to trail your TP. So you take your TP a bit here, then you adjust your stop loss, then you take your TP a bit further, adjust your stop loss, and try to work your way up lah. Next one, lastly for US Spotify. So Spotify, I the first entry, the first post that I made on Patreon was somewhere here, and I'm not sure if anyone entered and if anyone exited, because the stop loss is like here. So if you prematurely exited, right, you are missing this big trend, and I think this trend is still going to go up further. So we have a big trend incoming for Spotify also lah. So that's basically about it. I'm sorry we have exceeded by 15 minutes. If I come 15 minutes earlier, then we should be on time lah. But I do hope you all have a bit of insight on when to chase and when to go in for the second entry. So a lot of thing is I believe is really quite common sense if you truly think about it, because all these questions are something you need to ask yourself, whether are you comfortable, what is it you really want, because what you want is different from what I want. I cannot give you a answer that is applicable to every single situation. So if you are looking for that magic number, a magic solution for every single situation, right, it's never going to work in trading. Trading is very dynamic. Trading is very subjective, because each one of us has different risk appetite, different capital, different background. For example, maybe a student with $10,000 capital from his parent as pocket money and have nothing to worry about, he or she can YOLO all the way with that $10,000. But a family man with $10,000 saving, with kids to feed, a household that's commitment, mortgage to pay, right? He might not willing to risk as much. So I cannot give you a number and then expect both of these two person to follow that number, because it's not going to work out. So you have to ask yourself, what are the how does that situation applies to you lah. So whether to wait for retrace or not, whether you want to chase, whether you want the second entry, is whether are you a greedy person or are you a more conservative person. And based on that, right, you make that decision. But whatever decision you make, it should always come from the point of, am I comfortable to lose this much? So you should never take a trade thinking how much can I profit, but rather how much am I willing to lose. And if you keep that mindset, right, you will realize that a lot of things that you think matter in the past, mainly entry. Entry is the most common question that I believe a lot of people misunderstood. Entry is the least important thing. The most important thing is correct stop loss. Correct stop loss is much more important than correct entry, because your entry can be anywhere, but if your stop loss is wrong, right, you are going to be taken out of the trade, even if it's an uptrend. But if your stop loss is correct, maybe your entry can differ by a bit here and there. You will still be in the trade no matter what. So start thinking from that particular angle. And I do hope that this week you all make a lot of profit. I really hope that, because a lot for personally for me, a lot of counters are hitting TP here and there lah. So I do hope you guys make a lot of profit. And in the coming week, right, I believe STI SGX Singapore market is going to be very bullish. So do focus on Singapore market itself. Do go ahead and look at the scanner for Singapore and try to come up with a few trades of your own. And I believe with today insight, right, you'll be able to have a new way of looking at how you should take your trade lah. So yeah, thanks everyone for today's session. And as usual, right, this recording will be uploaded. So if you want to hear all my nagging all over again, right, you can go and watch the recorded video lah. So okay, so thanks everyone. Have a good night.